Hello, everybody. How you doing? I want to go through the pro trades we have on right now. There's one that's sort of in an odd spot. Um, and then we're gonna look. I'm gonna look at some calendars. I thought this would be kind of a good butterfly time. However, I'm not so sure how much we get, how much of a vol drop we actually get. So I'm looking at the market. I'm looking overall. I'm saying, you know what? The big rally to over 6,000 was on I think, like Doge and Trump agenda and all this good feelings, at least for market participants. And I feel like this last judge thing, it feels like that momentum is kind of stuck. Like, there's definitely been a lot of effort out of the White House, or a lot of directives, executive orders, whatever. Congress really hasn't done much. Musk is leaving, although he was only going to be there for 6 months anyway, or whatever his time is. Doge is still there. But, unless the House is on fire, all Congress seems like they can do is spend more money. So anyway, I think at this point we're in a definite show me area with where the stocks are. AI is still like a growing thing, but as far as like trade, like the market's going to move, I don't know. It feels a little stickier to me. Maybe I'm totally wrong, but that's kind of that's the vibe that I see. And when you have that kind of rally this morning that sort of just goes away, you look at it, you're like, oh wow, we were probably what, 595, 596 overnight, something like that. I thought we could get to 600 on some good Nvidia vibes, but I think at this point we need to say interest rates lower. Yep, failed breakout is a bad sign, I would say. So anyway, that's, I think the short answer is the market is like, I'm going to think it's going to be a little flatter. And I think it feels like the realized vol should be coming down. If Trump can't really do the tariff thing, although he could make deals, right? Can he make trade deals? I don't even know anymore. So I think we'll see some maybe a little less action, but anyway, that's where the market, I think the market is in general. So I was going to look at some calendars and SPY today, but we do have several trades on. And at this point, I want to see what we've got going on. So here, our Tesla trade. Did anybody want to? I think the calls got to what? This 375's got to $18 on the strangle. Pretty tempting to sell them. We got to what, 365, $19. That's pretty good, right? Because that 330-300 spread, where is that thing trading right now? So anyway, I decided to sell that short-term call instead. Let's see here. And our spread is, spread's $6. So 19 is like, what do we get to then? 20, probably 25, I think $24 overall. So that's why I picked. So what I did is I sold one Tesla June 20 390 call. Not June 20, June 06. At like I got around 460 for it, I think. So that puts us into an effective price of about $17.88. Anyway, that's what I get there. I still think Tesla can rally, and 400 is kind of the goal. 375. If we get there, we still have no trouble closing closing the diagonal call spread if we want. But it does take here, and I'll just show you. This is, I wanted to sell into the rally here. Let me, I want to show you how this looks. Give me a second. The next trade here is SQQ versus VXX. So I have our July puts were actually green this morning. I think they were trading like 245, and I sold this call here. This was actually a closable trade this morning for maybe 50 cents a contract per spread here. Because I sold the SQQQ calls, I'm up about $30 a contract there. And then this morning, the 48 puts, when we were trading around 52, they were trading, I was seeing like 240 on those, 245. So that wasn't too bad. So this was closable here. This trade here now. So this is kind of where I am on it. The calendar went away, except I got 35 cents for the puts, the 570 puts. And then it cost me a nickel. I'm just going to say 240. It cost me a nickel to roll these puts. Now, can they get to 370? Theoretically, sure. We rolled to the 1 VXX. June 20. 47 put. Because again, the 52 puts, they kept ringing a dollar, and then nothing happened. So as much as I wanted to try to get more money for the Mays, it just we never got the action that we wanted there. I am finding all of the volatility action today to be a little bit surprising. VIX is lower again. We're moving into the weekend. That's not too surprising. But if I add, actually, I don't even want to bother show weekly on multiple days. If I take today and I take yesterday, all right, so here's yesterday's curve, and here's today's curve. Anybody find? Yeah, we did sell some of the 34 calls against the. I have that. I'm sorry. You know what, guys? Sorry about that. I sold these for one. I sold one SQQQ July 18, 34 calls, and I sold these for I think 115. Right out there. So that's literally taken. You're in a call spread now for just 60 cents. And I have a legacy position here. Those 55 calls, I think I got $5.50 or $6 for these. And again, this is another one where we sold the 40 calls. And I'm going to get our portfolio up, by the way, for this. Been a little loose. I think I was at 115. I can't remember the exact price, but I'll get that price. And then we sold those. I think I got $5.50 for mine, 5.5 or 6, something like that. So we were in here for 144 plus 269. Okay, 413. And then I'm going to say I'm pretty sure it was $6. And that's going to be because that was a huge vol markdown we had. So we're into these June 20 June 2030 calls for $1.87 credit. And I'm using these calls as a loose hedge against these 47 puts. Now, I forgot I ran a stop on these, so I'm going to have to buy them back for myself personally because we had that run. I think they got over $1. So I'm just going to buy some of them back just to have, so my positions are the same. Anyway, so we have, there's plenty of leverage we have, but we got vol going up and the market kind of going up. So VIX is going out, but the futures are going up. All right, so let's see here. Wow, all those Cisco call buyers were wrong. That's for sure. So we bought the 375s here. So I just, again, showing you what buying one call does. And then we have the 30. And the 3,300. And I think I paid around $14 for these. And then I believe I paid 7. What is it? 7. $7.88 for the put spread. All right. So this is actually showing our trade down a little bit. I guess that's right, 21.88. But we did sell that call. Well, I mean, on a 10 lot, that's only 37 cents per contract. So we're up a little bit on it. Right, because again, you get the decay factor. So right now the trade has 26 long deltas, but as soon as you sell those upside calls here on June 6th, again, we selling into a rally. We've had about a 10-point rally here. We sold these for 460, I think. How about the 360, 390s? It takes our theta down almost nothing. Now we don't have a lot of deltas, but we go to like 400 or whatever. We'll make some money. Obviously, we make a lot of money if we get to 390 next week. So it's kind of consider around here. We rally a little more. We have no more theta. So it's just a good way to chop your decay off. You still have upside. And if the market really decides to sell off, we're still in a good place. Oh, I got Pearl again. Hold on, Pearl. So any questions about the current positions we have? So again, I was very close to selling the 375 calls at whatever. I think 18 bucks I would have been happy with. I mean, it was a 10% gain. It's always the you know, do you just take the easy win and move on to something else, or try to grab a little more out of it? Oh, I forgot. So here we sold 460. So we're up a little money. And that's like the current, so we have market going up, vol futures going up. I don't think that's a very good recipe into the close. We are flattening up considerably here on the front end. So I don't think it's a very good recipe for what's going on. That's kind of where I see that. But the market's not going down. That's ultimately it. So I thought like a put calendar. I wanted to price some calendars out, because the volatility here has gotten pretty low. So again, if I'm looking at my pro sheet here, and like, you have this kind of like drop and vol, and then, when you're down here, you start looking for cheap calendars, see if anything is going to pop up for us. Basically, we had a short-term low in volatility, and now it's popping up again. So it's probably, again, I think suited maybe for like I don't know, 590 might be a little too close. But we'll see if anything looks good for us here. I just want to see here. So, VIX puts I bought yesterday with the market up are down money. All UVX, everything is just like very. Mike saying the June 6-9 calendars seem like a good deal. I'll take a look. Yeah, well, the rally is. Well, the market likes. I mean, ultimately, you rally and vol crashes on confidence, right? And I don't see where interest rate policy is like they're not lowering. Congress is not going to stop spending. They could, thus the confusion. Trump can't seem to get anything done. So it's a hard, I don't know if that's good or bad, but it's just what it is. All right, so let's go to. Yep, I will point out very quickly on what's going on in this sheet here. VVIX is down. If the curve is flat, VVIX is about to move. There is a weekend, but still. Yeah, I hear you. Dragon. But I'm like all vol is down. It's like, sometimes, traders are like, okay, VIX is 19, but I don't think it's moving anywhere because we're still like a slightly, again, if you're looking at the straight curve, still in contango. It is definitely flatter, but yeah, I see it like VIX is dropping, but you know what? I don't know why the futures aren't dropping. Like nobody wants to sell them. That's kind of what it feels like. Yeah. I mean, here's the 28th and here's today. Just, it's a very odd, very odd. Excuse me. I don't think we've done anything since this morning, right? We rallied and spent the whole day just going back. I thought I was going to score in my in weekly profit cycles and make some money on the call spreads, but nothing. So here I'll show you what's going on in the sheet here, and then we can. So generally, and I'll just kind of set this up. I think I had some. If I look at the pro course, I need to put another set of. There should be the platinum course in there. Let me see here. But I have a here, and let me do this for you guys. So what I want to do, here we go. Term structure 8 and 9. So I'm going to throw this in the pro room. So I threw a couple of sheets in there for you guys. Okay. All right. So yeah, because we're like all right, let me get this, and let me get my sheet here and get going. All right. So basically here is this is May. Harple, I'm bidding the Jan 27 SPY puts. You buying how much are the 500 puts? Like $5? 535 puts for $25. Are they really? Golly jeepers. So basically, when you trade trading index calendars, you have a couple of factors, right? There's what we call like the forward vol factor. And there's your theta. And there's move to the strike. Now, the reason I look at these strings is these are basically how an index trading a SPY, Q, SPX, whatever calendar can pay. So forward volatility is just the difference in terms. It's the net volatility, I would say, which is the volatility cost of the calendar. So one of the things is you don't want to buy calendars, index calendars for big dollars and have the volatility collapse in the calendar, or have the forward vol collapse, meaning the short part that you sold that's producing the theta doesn't drop relative to the long side that you buy. Because what a lot of times will happen in that situation is the liquidity providers will continue to hold the short-term volatility relatively high because nobody's really selling it, right? Or they'll hold the theta to the last possible moment, but then volatility drops on the back end. So what you need to do is you want to see how much actual dollars you're paying, how much volatility net you're paying for the calendar you're buying. So this sheet is, I had it working anyway. I don't know what happened to it. I guess here it is. Okay, good. So this sheet does, so the first thing is, this is, let's refresh every 10 seconds. So what it does is this sheet pulls all this vol data from live vol. So these are just all the terms. And this is telling you which number is which. Telling you, okay, I'm going to sell this term and buy this term. It's a pretty clever spreadsheet that Scott created. So, my idea would be, okay, do you sell the May 30s or do you sell the June 6 and buy the June 9? So again, because of the weekend effect, you want to match like Mondays to Mondays or Wednesdays to Wednesdays or Fridays to Fridays. So it takes the weekend into account in a roughly similar fashion, because, the weekend, we don't trade on the weekends, and the liquidity providers, like the Monday options will look very cheap. And sometimes they're so cheap that you can purchase the Mondays, like buying the June 9s and sell the June 6s, like I think, I don't know, Mike M suggested. And you're going to end up with very, very cheap options. And you're buying a very cheap forward volatility. So the calculation is, we have a forward volatility calculator in this sheet. So this line here that says forward vol, it actually tells you, So when I trade the May 30, 29 calendar in this instance, it's telling me what net I'm paying for the 30s. So it's saying the back month IV is 21.93. I'm paying a 21.93 for tomorrow's volatility. Now, we've got a PCE number coming out. So, I don't know if you really want to buy the May 30s because generally the vol comes out. The trend for inflation has been lower. All I know is I look at house prices, except in coastal Maine, because they were pretty cheap to begin with a few years ago. Everybody just discovered it apparently. But used car prices are lower. I don't know. The only thing that's not lower. Does anybody food shop? Have you guys seen the price of cheese? I don't know if anybody here is cheeseheads, but not Wisconsin cheeseheads, but price of cheese hasn't come down. It's still pretty darn expensive. Like a block of decent mozzarella cheese is like $7.50 or $8 or something. Anyway, French tariffs. So what I want to do is, if I want to sell the 6s, right? So the short expiry would have to include this week. So we go to the 8. And then it'll give me the long expire will be just past it. So it's going to give me here's June 4. Let me get some data here. It'll take a second. So what Mike was saying is that these calendars look relatively inexpensive. So like the 580 put calendar is 40 cents. They're saying the forward vol is 12.3 points, but it's not taking out any days because I have the little yellow thingy here. Okay. And that yellow key is not taking out any volatility days. Right. So yellow say is like, hey, I'm not taking out any theta days, which is kind of weird why it's not. I got to ask Scott why it's not. It should take out at least 1 or 1.5 days of theta. So that key, it basically takes the theta out of the trade for you. And I'm curious as to why that doesn't, because it's over a weekend. And here, now I got to kind of eyeball it, which is a little annoying, but theta to vega is roughly 1 point here. So 11 volatility, yeah. That's like 2 to 3 points lower. So yeah, these are very inexpensive calendars. So the forward vol, so all I do here is, because basically one volatility point is roughly equal to 1 day of decay. If I'm paying $10.75 for the calendar and they're $14.93, I'm saving 4 volatility points below. My forward volatility is 4 points lower than the back month implied vol. So the way this is setting up is the market is overselling the June 09s. That volatility is very low. And what happens in general is, because retail does not care about these options, they write them like 2 weeks out, whatever, right? Sell calls. It's like a little bit of a sweet spot for like the 2 to 3 week option tends to trade relatively inexpensive when you're setting up a calendar. So because 1 point of volatility is roughly equal to 1 day of decay, so if I have 2 weekend days, so 2 volatility points, but I'm getting almost 4 points of edge here. So essentially you're buying the June 0906 calendar, which Mike points out correctly is pretty damn cheap. So you're probably paying 12.5 vol for it, maybe 13 volatility. So in this market, and if you have questions, ask. But in this market, if you're buying a 13 volatility, do you think that's a win or a lose relative? Like if somebody said, put a gun to your head and said, okay, you have to buy 13 volatility for the next week, would you do it? In the current market we have. do you think you would lose money on Vega? Nobody's answering my question, which is okay. Maybe you just like don't know what the question is, but it's hard. It's hard to lose money on it. Dragon, sorry, trading. So it's very hard to lose money buying Vega at a 13 volatility in the current environment. Right? Generally, if you can buy implied vols lower than the realized vols, you're doing okay. Yeah, not with VIX at a 19, right? Because anything can happen. I would say like, yeah. I don't think these 580 like going down. What are we trading right now? 592. Maybe a 585 put calendar is 42 cents. They're pretty inexpensive. I would even consider a double calendar. The 85.95 double calendar for the 0609 is trading around less than $1. We should be able to make money on that. So even if you bought like, like 83, that's about 1.5% out. So also, did I answer your questions on what the sheet represents? So this is just the data refreshing. So again, this is telling you basically how much you want to refresh the sheet. Here is the legend telling you how many days of theta. So you look here in the forward vol, what color it is. So if there's any kind of discounting going on because of the weekend. And then here you have a blue, yellow, red. Basically, if your forward vol is at a discount in blue, it's a buy. Harple's saying $13 straddle. So that basically means we would go to let me just see where that is. This is one of those things where I would probably prefer I mean, did we ever go red today? I don't think so. This is one where I would hedge with a junk call, but I would be more inclined to buy the puts, the put calendar. Let's see here. So I would go down to maybe 580. So June 9, 588 right now. Hold on here. Sell the June 6 580s. I might even buy a little more duration, to be honest. Let's see what the 06. Let's get a little bit more duration here. What's the following week? I'm going to just see if there's a little more duration there that I could buy. So we're selling the 06. And now I'm buying the 13. That would be 7 days. That's a standard calendar. So even the standard calendar, there's a little bit of volatility edge there. Not much. The 20th, that's the next on 7 is 13 and 20. So the 06, okay, now let's do instead of, let's do Wednesday. So we're selling the 6th and buying the, let me get some data here. Selling the 6th, buying the 9, the 11. And they're not taking any days out here. Yeah, this one they're not taking any days out on the 11th. It's not as egregious because you got a couple extra days. You got Monday, Tuesday, Wednesday. But the 580 calendar there is like $1.14. It's not a bad one either. So again, what this says is you want forward volatility to be under the back month implied volatility. Selling the 6th is in front. The 11th is a little less weekend intensive. You still lose 2 days, but you have 3 trading days until expiration instead of 1. So the weekend is a little bit less of an effect. And 6. Oh. I mean, these 80 these are just not very expensive calendars. For 41 cents, and you're only paying like a 12 vol. I think you could end up with some extremely cheap puts for a day. Is how it looks to me. The double calendar could happen. 85-cent cost for 13 cents in theta. I don't think the double calendar is that bad of an idea. I don't have any really long. I would just buy one. Appeals court temporarily halts ruling against Trump tariffs. This is so funny. Let's see here where our calendars are. Well, that'll throw another monkey wrench in. Hard to believe the market rallies on that news, but odder things can happen. So the short answer is these calendars look well priced. A double calendar, I don't know. Let's see here at 9.6. So they're only about, so the 80 calendar is only about 1 delta. Not really a hedgeable trade in my view. I mean, the easiest thing for me to do here is just buy a few of these put calendars, these 580 put calendars. Here, and then if we started to rally, you could hedge, but it's just one of those where I think it's so cheap, it's going to be very hard for that 580 put to get a whole lot lower than 40 cents. We would have to rally above 56, above 600 to make that happen. So here, let me buy. So it would be okay. I would say for 40 cents. And oops. And again, there's only like 5 deltas. 5 deltas. So I think this is a cheap downside trade. And that's about it. Do you guys hear? I'll put this into the stream here. And I think this is what, 3. I do have a trade number on this, 336, 337. This should be 338. All righty. And there we go. And I want to put a bid in for it. Can't have too many puts. And again, I think the easiest way to manage this is, I put it in at 41. It filled instantly at 41. Is I would just manage this by just allocation. Meaning, in this account, I only want to risk about $500 per trade, so I'll just do a 10 lot. Come what may. And there you go. So did you get your questions answered about this sheet? So what it's doing is it's calculating for you the prices of the forward volatilities you're going to pay. This is an at the money summary, just making it simple as far as you can look around for the right colors to see what could be an interesting thing. And this is telling you here where you had 2 days of theta, although they're not giving us a data point there. But it's giving you around the ideas of the forward vol prices on, again, if I sell the 04s and I buy the 9s, I buy the 10s, I buy the 11s, I buy the 13s, I buy the 20s. And that way it gives you a rough idea how much you're actually paying Bill K. And, as long as that forward vol cost is relatively low, you have really, those trades will generally decay at a faster pace than normal, like positive decay. Because the volatility in the back month really isn't dropping very much. So net, it ends up being a faster decaying trade. All right. So we went through the trades we have open. We did a little forward volatility thing. And that's it. You guys have an excellent day. If you have more questions, just drop in this chat or the pro chat room. Have a good one.